listen-only mode.
Hey there, traders. What's going on? Jamie Saettele here. It is August 26, 2015, and starting up with the Midweek Strategy webinar here at SB Trade Desk. So it's pretty insane and out there right now, obviously. And the chart that I'm going to start with here is the hold on one second. Yeah, okay. So what we've got is what I've got here is the S&P 500 in black, and the euro in red, or sorry, the euro in blue, euro futures and yen futures in red. I just want to expand on the whole point about talking about, and Daniel makes a good Daniel Wilcox makes a good point. He says we're pissed when there's low vol, then say shit's insane when we get back. So I'm going to expand on that actually because I referenced it in the indicator that I talked about, I guess 2 days ago. So first of all, this is why I've been looking at equity market and posting those long-term charts or whatever is, if you have a sense that obviously euro yen, they're both at this point, along with, and that could change, of course, that might be about to change, but because once you reach peak correlation, then you tend to go away from it. But with the equity markets here in the S&P, S&P higher, dollar in higher, euro dollar lower, it's kind of one and the same, right? So it doesn't make a whole lot of sense to look at a bunch of different setups when everything is more or less, all the risk is concentrated, as everything's moving together. So here's the S&P chart right now, or at least the really short-term chart, I should say, because and Bernard asking, can you look at dollar yen and the DAX? Right, so everything's correlated. That's my point. That's what I'm saying, is that, if we look at, so if I change this to the Nikkei, okay, instead of the S&P, it's the same thing. You literally can't tell a difference. Okay, everything is literally the exact same thing right now. If they put the DAX here, it'd be the same thing. They're all the same thing right now. It's just one big market. Okay, so that's what I'm trying to get at. But I'd referenced this indicator the other day, talking about the fact that we've never had this kind of volatility expansion before. So yes, when you have low volatility, super low, it kind of sucks. But when you go from super low to insanely, kind of out of this world, it's almost impossible to make sense of it. So what you've got is, high volatility is one thing, but typically volatility builds up and then it builds up to a crescendo. Okay, so we don't have that. We went from extremely low to extremely high. In fact, the volatility on volatility went to a record. All right, in other words, it's the fastest that volatility's ever exploded. And so we talked about this with, in a sense, with pound dollar last video, perhaps. It's been referenced though recently. In other words, if the indicator that I'm talking about though is the count indicator. So when you have pivots, like floor pivots, for example, right? So this is a floor pivot, an R1, R2, R3, S1, S2, S3. So when I assign a value to each number, so like this is 1, 2, 3, -1 and then S2 is -2, S3 is -3. Once you go to, if you go to S3, that is a reading of -3 for that day. All right, if you go to R3, it's a reading of +3 for that day. So count that over 3 days, and the maximum you could get is +9, and then the worst you get is -9. And what we have these were readings of -9 on the Dow, and it happened 2 days in a row. Scroll back in all of history of the Dow, even 1929, 1987, okay, we didn't even get that. All right. So I'm not even talking about like recent history. I'm talking about ever. Okay, this is that 87 crash that didn't even happen. Okay, because volatility was still, what this means is that volatility expanded because pivots are based on volatility, right? They're based on the prior day's range. So we didn't even get this, in previous historic market periods. So it's just the last couple, the last year has been marked by either this is the 1929 crash. Hold on. Here's the 1929 crash. Okay, didn't even have a reading of -9 there. So the last, recent history has been marked by, it's not just extreme volatility or not extreme it's abrupt changes in volatility, right? Which can kind of be frightening, to be quite honest. In any case, let's look at pound dollar, because the same thing, I can say the same thing with pound dollar right now. All right. Okay, so cable. So this was the 20-day range plotted below the pound, okay? And we talked about the 20-day range being extremely tight back on, back here in August 12th and 13th. Seems like ages ago, right? Things were so normal back then now. So what we had is, an upside break. Obviously I was thinking that, it could just continue higher. But what we have is the possibility of that being basically an insane fake out. And it reminds me, when I look at the chart, of course, so previous periods of this have happened. So it happened back here, and this would have been a fake out. Okay, we have something much more powerful right now, in my opinion. You got to go back to the 80s. Let's see. Okay, so here's one. It's near an 81, near the all-time high. It doesn't really compare. The one that does compare is back. That's the breakout to the upside. So this one right here is actually kind of similar in its construction, okay, back in 1995, okay? Because if we were to overlay that, in fact, why don't we try to do that right now? If I go to a pound dollar, try to look at an analog chart. So pound dollar, and we had it 1995. Let's go to like June, okay, May of 95. Actually, that's creepy. It's the same dates almost. So May of 95 to August of 95. And it's actually almost the same dates. All right, so just bear with me for a second while we go through this together. All right. So May of 95 to August of 95 is right here, okay? We'll go to the top. Okay. And the construction of this is basically a head and shoulders, by the way, as you can see. All right. 1 second, hold on. Sorry, it's taking so long. Scrolling. I guess I'm not a very good scroller. Okay, so here we go. So this one's a little bigger. You can see it's kind of similar in that you have 3 tops, right? So tight volatility, the really tight range takes place here. But if we, kind of compare this point here to this point, top here, and then this top here, and then the 3-wave rally, right? And that's what we get. So the 3-wave rally from the low is quite similar. In any case, trading wise, using that as a template, really tight volatility, breakout to the upside, so to speak, right? But false, breakout to the upside here, but false, precedes potentially an insane decline. So let's look at the charts that, with slope on them. Pound dollar. Okay, we had the J spike yesterday, and then today we're falling off the face of the earth, but right into this support, right? You've also got, of course, this trend line, which was broken, and again, false break. And what's better than a breakout, but a false break, because it's a signal in the other direction. So here we go. God damn it. Can't get that thing drawn on there. And in any case, you get the picture. So here we are at support now. How far can this thing bounce? I don't know. If it's going to be a drastic decline, I'd probably be looking at first resistance in the 55.30 to 55.60 region. Simply former lows here. Okay, former low. All right, here and here. In the short term, if I look at this, I thought I had something drawn in here. I guess not. In the short term, we have a different support. From right here, okay? So 55.30 to 55.60. That's 55.60. That's 55.30. Slope resistance, old slope support here. You'd want to keep an eye on that. Old slope support here. And then as far as a new bearish slope, since this is so steep, that could be something to watch here. See this median line, which cuts through here? Okay, so you'd be, basically anything up in this, back up in this region, which appears to be closer to 55.60, okay, is kind of where I would be, interested in taking potentially the short side on the British pound. It's, if you look at 55.60, just looking across the chart, you've had a good amount of inflection points there. So given the possibility of cable turning over pretty hard with that false breakout from the really tight range, and just look at the momentum we have, you know, initial, first of all, why don't we look at the weekly chart? Weekly chart momentum failed every time up here at the 60 region. That's quite bearish, right? We'll go down to short term in a second. Daily momentum. This one's actually maintains a sideways, if not even a bullish bias, because we did have overboughts up here, but we failed, to push below 30, failed to push above, 70 on this latest one here. Okay, so you give that sideways at best. The 4-hour chart is the one that's interesting because this one actually enters bearishness now after failing to push up through resistance all those times with divergence all the way up. You see the little red dots that we had there? Red dots, red dots, red dots. Okay, so all that divergence finally giving way to a drastic decline. Again, I'm expecting a bit of a pop off this level. I mean, it's a big support area. Okay, so what did I say? This 54.90 to 54.50. What's the low right now? 54.66. I'm actually long some pound right now with a 54.20 stop. But, I'd be targeting 55.30 personally on that, just as a little short-term trade. And then looking to see if I could get a short at 55.60. So that's what we're looking at as far as cable's concerned. The extreme oversold on the hourly, right? We got below 10 here on the hourly. Typically, something like that is going to precede a broader move to the downside. There's all kinds of things you could say here about Elliott wave as well, with wave 1, right? And then an A, B, C, okay? Head and shoulders pattern, as mentioned before, okay? You got a head and shoulders pattern, top, top, top. Okay, so this, for all intents and purposes, the slope here is your neckline. And, again, looking for a little pop off of this. But like how far could pound travel, to the downside? Well, if we have the weekly chart here, I mean, look, first big support probably would come in, I would gather, on this lower parallel somewhere, which would be the low that we had back here in, the low that we had back here in June, near 51.70. That's 300 pips lower. Weekly reversal support is 49.60, and ultimately, this is such a big picture. This is a weekly chart going way, 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 way back, but lately we've seen some pretty massive patterns unfold. So we've been in a consolidation in pound dollar since basically 2009 lows. Okay, it's a giant range between basically 170 for the most part and 145 for the most part. We see what happens when ranges break. Okay, especially recently. And I'm kind of wondering if there's something extraordinarily dire that's going to happen with the British pound. I don't know, what would set it off necessarily, but that this decline here, this decline back here, I mean, we've had just drastic impulsive declines on a long-term basis, followed by, what can only be described as sideways trading for 6 years, and that includes basically a false breakout to the upside up here. Implication being what? That we end up trading all the way down below into the 130s at some point here. I mean, really, is the pound short the next really big idea? Okay. And if I look at some other charts with, pound crosses, for example, why don't we take a look at, we've talked about how the European commodity complex is so insanely stretched, right, to the upside. Not saying it can't go more. Obviously, in these markets, it's not all that great of an idea to look for turns on a macro scale or anything. But here's pound CAD. We just traded above the 2007 high. Okay, that's over here. All right. You're telling me that it's going to blow through that high? I mean, for all intents and purposes, guys, uh, currencies trade if you look on over a very broad scale, currencies tend to, especially tend to trade in very, very, very large ranges, right? And when something's at the upper end of its historical range, you're more likely to see some sort of a strong reaction the other way. And I feel like that's what we might end up getting. Here's the daily chart. Okay, we failed right up here at the upper parallel. This is pound CAD again, okay? Today's move. So this is still obviously within the confines of a very well-defined bullish structure. But, some sort of a broad topping process ends up taking shape. I think you have to pay a lot of attention to it. By the way, the monthly open down here is 204.50. And, if we were to end up breaking this before the month ended, we'd have a monthly J spike or a monthly reversal. Those are extremely rare. Obviously, a couple days left in the week here, but, pound CAD might get us something on the weekly chart here too. Okay. Obviously pound yen. So here's pound yen, ends up, we're still trading down, above big term or big support, obviously. So if that breaks, again, like I said last night with the equities, if this stuff breaks, then it's kind of like good night for more or less everything. It's difficult to think it's going to break on this first attempt, but hey, 187.35. This is the weekly chart, right? So this is the weekly chart here. We could end up forming a much larger top, for example. If you remember back here in 2007, 2008, 2007 was the topping process. This could be here. This could be the top back here. Okay. We could end up trading down here into, what's that? 175 area, which is almost 1,000 pips lower, and then pop higher from there as part of a larger topping process. The process is obviously quite different. I mean, you do have a double top right here with British pound, Japanese yen, and the target there is actually right there. It's 174.10. It's right near the 174.80 low from April. Okay. So in that sense, yeah, this is a double top, and we want to be short this double top. Nothing to work with there. Oh, S&Ps are trading nicely higher off of this this is a 15-minute pitchfork. I actually drew it from here, okay, because I didn't want to go off the panic spike lows. A lot of times you don't necessarily want to do that. So, obviously dollar yen to the upside on this. Mark saying pound yen 85.90 and then short again. For me, it's dollar yen 121, kind of all about that. It's kind of like that's the answer to every question right now, in my opinion. So obviously dollar yen was 119.50 right now. Here's the 121 picture for dollar yen. We have come into obviously an insane level, right? As we all know. You can kind of envision things are so panicky right now. In my opinion, you can envision this playing out as a broader topping process that takes a lot longer, right? So, there's a lot of stuff in between here and there. I mean, why don't we, here's what we're going to do. Let's take a look at, to give you a sense of like how, wild, especially with pound yen, because that's, people love to look at that one, obviously, because of, all the vol and the movement there. And that might be the best trade for a really long time going forward. Um, if we look back to what this looked like back in, okay, so here was the top, okay? This was back in 2007, right? Yeah, exactly. So let's say even this initial down move that you had off the top, okay? I mean, this was 1, 2, 3, 4, 5, 6, 7. This was like 7, 8 days of pure insanity right here. That was a range of 240 to, what's that? Well, yeah, 237 to 244. Okay, so this is a 700 pip range. If you were trying to short on this after the initial decline, that's why I think we need to put in several days of consolidation, and call this day 2 of consolidation, right? So the move is higher in the near term to sideways, and then we're going to look to identify something for a bigger drop. By the way, this was back here in 2007. There was the pitchfork right there. You see, you wouldn't have actually had reach up there, but you would have had the sliding parallel right here off this high. See that? That nice? Anyway, that's something I'd probably be looking for, by the way. So in the current situation, if we were to draw that right here, right? Check out what you got. I actually already hit this one, but you do have this a little lower. That cuts through pretty much nothing, but you get the point. So yeah, call this day 2 of consolidation around the median line, of course, right? So day 1, day 2, we could consolidate higher and lower from here. To me, the best levels to look at, let's call it the slope line, sliding parallel using this high from 618. So old support basically was resistance here yesterday, very near 190. Okay. So this gray sliding parallel might be what you want to watch. Again, chaotic, or chaos is the description for what you should expect with these consolidations. In general risk sentiment. This consolidation's been 190 to 183, so basically 600 points consolidation here from yesterday's high to the low on Monday. Okay, and 121 for dollar yen. Again, that's the median line, slightly higher than, well, it depends when we get there, I guess. But if we were to get there today, and again, don't put anything past what can happen in these markets. But 120.90 to 121, 121.05 is the old median line. Of course, that's upward sloping. So what you want to do is draw this and put a little sliding parallel there. It's going to be slightly above where you're at now. Okay. Another thing that you're going to want to do is draw it through this gap. Okay. And finally, probably draw one off former highs, cut through here. All right, so it's very much an experiment at this point in identifying resistance for the consolidation to end in these things, but I have a feeling that it's probably going to happen very near 121 in dollar yen, okay? And again, it's nothing that there's like a horizontal level that I'm obsessed with or anything like that, but it's more the the median line. If it takes a little longer than expected, which probably should be expected if that makes any sense, then probably 120, 180s. But in the near term, I think this next sell for part of this range is probably 121. So you can envision us ripping higher, coming off lower. Everyone thinks we're going to fall apart again, going higher, and then the bigger decline takes place. Look at the short-term picture of dollar yen. You get the sense that maybe this is like an A, B, working higher in wave C, right? Something like that. And then this is something also that I want to address. So if I were to measure 2 legs off the low, right? In corrections, a lot of times you get 2 equal legs. 2 equal legs is all the way at 2266. Okay, being Fibonacci proportion is 2105, so that's interesting. But a lot of times what's best to do with these when you have, because look, there wasn't a whole lot of trading between 1785 and 1620. I mean, you remember that the other day? It was a pure panic decline. So if you do it from the close, draw from the close, which is, and you can do that with pitchforks too. And we've talked about that before, but you actually do get 121. You get 120.97, in fact. Okay, and that obviously here's the median line, right? And if I go back a little further, add a little more time on this, you'll see the other trend lines and stuff. This is the trend line from the upward sloping one. This is the trend line that went off to all the 2015 lows. Okay, it's a little higher. Point being is that I think we're probably going higher in dollar yen and risk before we go lower. Okay, and again, all the same market at this point. Where's Aussie at? 70.85, 70.70. Aussie put up that really long-term chart yesterday. Not interested in picking a low at this point. We need some sort of a setup to do it, but we are at some incredible, very, very long-term support, it does seem like, in Aussie, those really long-term pitchforks. Okay. Take a look at Euro Aussie, which is interesting. Again, here's Euro Aussie. This is the weekly. The pitchfork, okay, back here, 2012 low, 2012 high, in the early 2012 low. Those 3 pivots, okay, and then we got the huge move up off the lows here. Sliding parallels, which have been pretty decent pivots, basically ran into that here this week. Okay, and then there's another one that goes off of this low last year in 2014, and then the high and low from early this year and late this year. Okay, so Monday certainly felt like a capitulation, if you will, in a number of markets. And, dollar is difficult to assess, but as far as the, safe haven status or whatever it's called of euro, which, is silly. It's not safe haven. It's the fact that everyone's on the other side of that trade, and they're being cleared out as everything gets washed out. That's the deal. So, perhaps this is something that we'll be working with. We could draw the pitchfork here. This is hourly chart of Euro Aussie. This one might be better going off the close because we did come into that median line, okay, for support today. You can see the level that was support right here was 159.05. Again, this is the hourly reversal stuff. So hourly reversal resistance is actually up here at 61.65. So, if we get extra risk sell-off going into basically tonight, guess where? 61.65 comes into play, exactly at the close today. Okay, so that's a level to watch for resistance, really for the end of today, next few hours, the end of the US session, I should say. So this is a trade I'd be interested in as far as Euro Aussie on the short side. There is a setup here that's tradable, right? It's not just like looking at a chart and being like, let's see. There's something here, there, and this feels like it's oversold and blah, blah, blah. No, there's actual, level to trade on here with defined risk, and that defined risk is up here. Gonna obviously in this conditions have to go with larger stops and much smaller positions. Typical, we'll trade a 5-to-1 leverage. Obviously can't do that here. More like 1-to-1 at this point. At least that's what I'm telling you. Just that's what I would do. Okay. Yeah, sure, you can make a huge gain, but think of how much you can lose in these conditions. So I'd be looking to short 61.65 if we get there at the end of the day today. It'll probably feel scary as all hell to do it, but it should be if it's the right thing to do. Okay. And we have kind of, we're bouncing along here, this former resistance up here. Okay. Alrighty. So Euro Aussie is actually one that let's do the next trade. This morning I was pointing out some of the supports and stuff like that, and I actually wanted to put in a long at 59.06. It's, by the time I end up typing stuff, it's like, stuff's ripped 20 or 30 pips and just kind of, it's kind of a mess. So, plan on 61.65 here though for resistance in Euro Aussie tonight. Or I say tonight, but like in 3 or 4 hours. Okay. So we've gone through dollar yen. I guess obviously we need to look at euro. We haven't really taken a good look at the euro here, other than pointing out all the correlations. So let's start with the US dollar. Look, there's 2 days left in 2 days left, but we're going to get in the week. But we have a very large range, obviously, and it's possible that we end up closing, below 1386. If we do, we have a weekly J spike at massive long-term resistance, and we would have hit a point on the Bollinger Bands, if you will, that third standard deviation that indicates a potential major washout, and that we're going to end up heading back lower again. For me, near term 112.20 is the important level to know as far as any sort of upside resolutions possible. Here's the US dollar index. Okay, this level, this low right here, we're actually 61.8 retracement, same level. So we're right at the low, right at the 61.8 US dollar. So we'll see how the market trades around here. But we're kind of getting into a level where you'd expect some sort of a pullback. As far as the broader dollar topping process, not quite sure about that anymore, considering how far we've come up off this support. Obviously a good deal of it today. And if we take the long-term parallels and extend it, we actually hit that support. So that was, on panic Monday, if you will, in the markets. Okay. And I guess you'd say that this S&P 15-minute chart had to work out pretty well, right? All right. So it's only 30 handles off the low. So we were going to get to the euro. Sorry, here we go, euro. Okay, so here's the weekly chart. This is presented as is. So we started the week at incredible resistance, if you will, and then we have finished the week, or no, we're not finishing the week, we're in the middle of the week, at also the exact same level. Okay, so as I'm speaking, euro dollar is unchanged on the week. In fact, it's 4 pips lower, 14 pips lower than where we started. I guess it doesn't feel that way. But as you can see, we did run into a really big slope level in euro dollar. Okay, and this is the weekly chart. So you have to be aware of that. We did not reach the year open, obviously. The sell-off that we are seeing right now from the top is probably a little more than one would have imagined if we were going to head to that level in the near future, but still respect this slope that I talked about or tweeted earlier. And you can see that's, what's that one? We talked about A, B, C. Okay, I think I have it. Yeah, it's right here. So if this is A, B, C, and if we are going higher, then the level that you're going to want to see for support in euro dollar is probably down near, I would say, the 1270s, 1280 area would be the one that I would take most interest in. Okay, and here's the big reason why. So we've already got that. Okay, so here's the median line. The 25 line was actually just hit this morning. Okay. Now this doesn't really cross over anything except for the low here, but what's the other horizontal level? And the level that I wrote last night is 1277, right? Well, guess what? 1277 going off of here. So you've got really good touches on this one. And again, I have no clue what the euro is going to do, 120 or parity or what have you. I do know that this particular slope line has a lot of good stuff on it. Okay. And this is probably the one that would be worth trading on a swing position. Okay, so just get rid of that. 112.77. It's basically 112.77. This is a 4-hour chart, so you could say it's 112.77 in like tonight or tomorrow or the next day, or basically into the next day or so, right? And remember, talked about the deal with using the spike, right? 2 equal legs down on euro dollar. If you use the spike, it's 112.44, okay? If you use basically the 60-minute close, because again, there's probably not a whole lot of trading that went on between 116.67 and 117.12, right? I mean, if you were watching the screen that day or whatever, then you saw that it was basically a complete washout, and it was pulled back within a couple minutes. Okay, so that gets you 112.88, right? That's much more in line with the high back here of 112.77, which was a minor resistance area. We did pull back from there before screaming to the upside. Okay, so for me, 112.77, 112, call it 112.75 to 112.90. That might be the trade in the near term for euro dollar to get on the long side. Again, watch it in conjunction with the equities markets. S&Ps right now are up 27. So go to 60-minute chart. Resistance is going to be roughly, let's see, 240. 1931. So, if you're following this short-term median line, put resistance up here, the median line of 1931 or so. Okay. Okay, Mark, nice. Yeah, I like that. So 112.84 is also the 61.8 of the last move up, including the spike. Okay, so fair enough. And that's, I guess, another reason why I put a good amount of stock into into just straight up horizontal levels, right? I mean, it's pretty clear that again, 112.70s, you did have some pretty big trading into that, right? I mean, that was stuff back here on the initial short covering rally, if you will, into May. Okay. We had a spike into there and failed. So had obviously this crazy spike and failed on the 29th of June. So yeah, I would, look at 75, 1290 as a level to be aware of, okay? Especially if it happens over like the course of the next few hours, because, if you've noticed what's happened the last few days is you've had basically the end of day US move has actually been retraced. That's something that's, quite common when you have, these so-called risk on, risk off markets where kind of everything is moving together. And, by everything, I mean the markets that were used as funding currencies like the euro are being washed out when stock markets go down and liquidity expands and contracts. So, it's not uncommon to see the important highs or lows of the day made again around 4 p.m. US time. So pay attention to that U.S. equity market close. Pay attention to, when Tokyo opens at 8 p.m. This is New York times I'm saying, so obviously adjust for your time. Pay attention to when Chinese markets open at 9, so 4 p.m., 8, 9, and then U.S. markets open in the morning. So at 9, at 9:30. That's, you kind of have to know the market you're in at this point. It's so tied into what's happening in global equity markets that it's important to know the times of day when you can kind of expect to get interesting moves off of support, resistance, etc. So little intraday behavior changes and whatnot. So that's what we're looking at with euro. And again, this is totally different than like the broad idea I'm talking about as far as the pound is concerned. With the pound, that's much bigger picture idea, of course, and would be thinking we bounce here, right? But I do think pound's one of the better ideas. So bounce here, watch for 55.60 or so resistance. Euro, bounce. But again, I don't know if that bounce is short-lived or not. Don't know, don't really care. What I would want to do is probably take, the longs into here and then see if we can, get back and retest this median line. If that ends up providing resistance, then you would actually have, maybe some bearish evidence. You could draw this too, right? So we've got that median line as well. Really, really short term. But if it's a correction and then it ends down here at the lower parallel which is shift, okay? And again, I'm drawing this off the close. If it's not and it keeps going through 1275 and 1290 and what have you, don't want to give it much room at that point. So again, for me, 1220 is the line in the sand for anything bullish outcome on euro. And there's 1240. Okay, that's the European low from last Friday. Okay, the daily low from last Friday for the whole day is right here, 1229. All right, so wouldn't want to see that low taken out. Big reason why is if this is your reason to be bullish and buy on this sliding parallel, which again was good support and resistance a number of times. If that level fails, that's kind of the closest horizontal level. You don't want to be fooling around with the long side there, because then it's total washout time. And the next support wouldn't be probably till down here, lower parallel, which is 1180s, in line with the highs back here. Right? Mark says it won't. Keep the faith, man. Yeah, so the way to trade this, by the way, guys, you get that drop into the 1275, 1290 region, whatever. If we get that, get a long. The stops down here, 1240. You're giving yourself, if you get 1275, you're giving yourself, let's say 1220, giving yourself like 50 pips of risk. It rips. Probably want to take some off at 1377, which is the weekly open price and kind of where we've consolidated around just now. Okay. So even on that piece, you're giving yourself 2-to-1. Keep the rest and see if you get lucky for, again, the move, if there is a bigger move in the cards to the upside, right? Raj talking about high volume. Yeah, so if we look at the volume spot, let's see here. Actually, I have it up right now. Okay, so Euro high volume level. You can see the high volume level that we had on at the old Monday, the top day, right? So top so far, I should say. Yeah, you'd look at that as being resistance as well. In spot market and in euro dollar, that's 116.19. Okay. Looking at other similar volume figures, had one back here in October 15th, which was a total fake out as well. Made a little head and shoulders up there before going lower. Before then, you've got to go back to all the way to 2011. This ended up being a breakdown, high volume breakdown. So that, oh, Raj saying 1377. No, 1377 is the weekly open price, actually. So these are hourly high volumes, okay, right here. So yeah, there's no high volume around 1377. 1377 is the weekly open, though. Okay. The next high volume level on a daily basis, if you go a little lower, would be this spot here, and that's back on the 2nd of June, and that is in euro dollar. It's all the way down to 1150. So yeah, this is fun too. We've got this is the trend line that goes off the highs back here. The underside of that one comes in at 1280, right at 1290. What do you know? And then here's that sliding parallel. This is the one that you guys are familiar with, that I showed you on the intraday chart just now. So there's our trading strategy in euro. 1290, 1275, write it down. Pound dollar, 55.60, 55.30 even. Raj, the market is driven by um, supply and demand. That's at its base, okay? And you can view that on the chart. That supply demand manifests itself. That psychology manifests itself in in the chart patterns and the support resistance that we look at. Okay, so that's what we're looking at as far as euro dollar is concerned right now. Okay, we're looking at pattern, looking at trend. We have a breakout, pulling back extremely sharp, trying to identify levels that might be worth getting on the long side to continue with this breakout, even if we're not going to continue with the breakout, to at least get a low risk entry for a bounce, right? And the best that it looks like it's going to be this line, right? There's a lot of things that line up there for euro. Okay, and so, that's one 112.70s. If we look at dollar yen, we've pointed out 121 as being the big spot to look at. If we look at US dollar, we look at US dollar, your best resistance at this point, besides the level we just hit, which is this low, which is again the 61.8, is probably going to be 12.016. And what's 12.016, you ask? It's the month open. It's daily reversal resistance. Okay. And it intersects the upper parallel of a slope that we don't yet know if it's valid or not, although I'd give it something simply because if you look at these, look at where a sliding parallel would go through, right? Get the high up here, cut through these levels here, you can move it here, okay? Goes through a gap, it goes through 710 low, all right? So it would appear to be the proper plane to at least look at or consider for something on the upside, okay? In in US dollar as far as resistance. So the upper parallel from that, which crossed this high up here, I know it's subtle, but it's still, it's true, it's accurate, okay? So 12.016. So Raj say, I noticed one thing, every time market breaks, pulls back, I go long too early on pullback. Maybe I should wait for it to retrace to a lot lower because retail traders might basically jump in too high and get stuff down. Right, so here's one thing too, Raj. And everybody, this is human nature, okay? Everybody does this. So don't say oh, it's retail trader, blah, blah, blah. The only difference between retail trader and, institutional trader or something is that they have bigger pockets, okay? So they can withstand and wait it out but people also get used to recency. In other words, what's just happened, right? And, there's fresh memories of that trend that we had in, the dollar last year, euro dollar tanking, that every time it broke out, okay, from a pattern, whether it was a short-term pattern or whatever, for the most part, every little tiny pullback, it was really good to sell that. So people get used to that breakout. Obviously, conditions are quite different right now. All we have to do is look at this chart to see that, okay? This was a giant trend to the upside. This is a giant range. Maybe it could get resolved with a giant breakout to the upside as well, okay? I don't know. It's a distinct possibility, okay, especially since we held this support, All right, so the US dollar could end up screaming higher from here, and whatever, the euro could tank, the pound could tank, the dollar yen could rip. I mean, there's a lot of stuff that could happen. All right, and probably most of it would be completely unexpected. But at the time, what we have here is a range, right? So a lot of people were getting really excited when you read other technical pieces back here about this big dollar breakout to the upside. Well, instead we got a big move lower, okay? This big lower has gotten a lot of people bearish, so it's only natural that we've snapped right back because those are the conditions we're in. We're in a range, all right? As we get up here, knowing that you're in a range, what you should be doing is looking to sell that range or do nothing, okay? So don't get excited about a possible breakout on the upside in the dollar and start, buying it before it breaks out, because at that point you're buying in the top of the range, which is like the worst, by definition, the worst thing you can do, right? You're going to get the worst price unless you just get totally lucky and it breaks out. So there's no trade on this, okay, at this point, until you get to right here. And again, maybe that coincides with the euro being where we thought it might find support, which is the 112.75.90 region. Maybe it coincides with dollar yen trading 121, right? So that's what we'll be watching for in the near future, over the next day, basically. We also have to consider what's happening in the bond market right now. Okay, we have, if I go back to a weekly chart here on the bonds, this is a big uptrend, has been for years, okay? Kind of feels like there's a huge shift underway, right? Well, we just came into this resistance yesterday, and here we've got bonds retracing everything they've done the last few weeks. Okay, in fact, we were all the way back at the month open right now. Okay, so with bonds, also a range. This is an uptrend short term, a downtrend medium term, and a really big uptrend long term. Okay, if you crack below here, you're probably looking for support on the lower parallel down here, but that's a really big move. But the way bonds and markets are moving right now, suggests, well, it's not that out of the, it's not out of question, or it's not, impossible for us to get there sooner than later. So what this tells you, by the way, is bonds high in this environment, people are freaking out, risk off, expect stock market lows, expect dollar yen to find support. Okay, if this thing gets down here, expect stock market to top out, look for stock market highs, look for dollar yen to top out. All right, so the one good thing, I guess, is that once you get into this environment, if you're quick enough to understand you're in it, then you can kind of, look at the bond market to give you an indication of what you should be doing. So we're trading up here at resistance. As I pointed out 2 days ago, we should be looking to buy dollar yen, okay, and probably sell euro dollar. Did I, say that? No. I myself was kind of scared to do it, but that's what we're looking at. It gives you another piece of information, another indicator. Okay, bond market up at resistance, and this is telling you that bond market right now, as I'm speaking, is at a level of support, so we could bounce right here, right now. Okay, it's not huge support, it's the median line, so it's not massive support, but it is a level that's been support in the past, or I should say resistance in the past. Okay. Yeah, Raj, totally, man. That's why you just kind of got to have it down, and just kind of like, have your levels down, and once you hit the level, you just do it, whatever. So there we are with that. Let's look at, what do I look at? Euro, pound, yeah, pound yen, obviously. The pound dollar, the pound crosses, I think are going to get really interesting. with the break, call it a false breakout on the upside. Um, but yeah, and that's, kind of moving forward. That's the way I want to, especially right now in this environment, the way that I think we should operate, the way that I'm going to operate is, you know, rather than trying to like present a bunch of different ideas, I'm going to focus on some of the ideas that, fewer ideas and, look to execute them better, right? Rather than following like, having 7 or 8 crosses that you're going to trade, and have crappy execution. Look to follow, a theme or two at a time, execute that, work on the execution over before the idea stuff. Okay, so that's the plan going forward, right? All right, so I'm going to end it right here. In summary, guys, hold on. This is our world right now. All right. Red is yen, blue is euro, black is any stock market of your choice, right? That's the Nikkei. That's the S&P 500. If I were to put China up there, it'd look similar. And it's right now, it is risk on, risk off. Okay. Euro Aussie is an extreme example because they're going opposite directions. But you can trade this theme with euro and yen. Okay. More yen, obviously, than euro. The whole euro thing might be played out as the washout, but in any case, whatever. So we're paying attention very closely, or at least I am, to get a sense of when we might have some turns and stuff and intraday stuff and whatever, bigger turns at equity markets, right? As we should. When we see support in the S&Ps, be aware of euro coming off and dollar yen rallying like we're seeing right now, right? In fact, I posted it right before this webinar started. Here we are at S&P support. So when I say that, be aware of dollar yen going higher. If I'm like S&P is getting up at resistance, well, then if dollar yen's at resistance too, like 121, which is what we're looking for, then, might want to be looking at a sell up there, right? So that's where we are. And I can't stress enough the importance of not getting too doom and gloom at this point with the equity markets ending the world, all the people freaking out because where's the S&P? I can't find my charts. Anyway, because we have. Here we go. Because if you do, you're going to end up forgetting about all these other opportunities, okay, intraday, like dollar yen rallying from 118.40 high volume level. We pointed that out, and then here we are at 119.70 and what have you. Here's that S&P chart, monthly chart, huge level, okay. Pay attention to 197, 198. That's SPY. So in the S&P futures, it's going to be like 1946, 1950, which we were up at the other day, 1955. Okay. But we're still at really long-term support. All right. So the next number of weeks might be marked by some extreme ranges like we've had today. So get used to it. And we'll look to do our best as far as having levels mapped out and try to give you a heads up on putting orders at those levels. Okay. All righty. All right. So that's it for today. Okay. Really appreciate it. And everyone take care. Have a great rest of your week. Okay. All righty. All right, bye.